Earnings season is moving right along, and we've got a big one for you today. We've got Meta as they reported their Q3 numbers after the bell. They follow Google, which reported their earnings yesterday, which were nothing short of spectacular for the search engine giant. Meta operates basically the exact same business model, just on social media rather than contextual searches online. Did Meta rise to the occasion and match Google's results? Now, Meta is trading at a higher valuation than Google is, trading up over 27 times. I tell you what, it's making Google look cheaper by the day. We've got a lot to talk about with Meta. We'll go through the results. We'll take a look at the revenue, the profit of the core business. And we're going to be talking about Reality Labs. How much money did the company lose running Reality Labs, and what's the forecast going into next year? And we'll also look at this technically. It was basically setting up at an all-time high. How is it reacting in the after hours? And of course, a la Mark Zuckerberg, we got the gold chain dripping out. He's an FP Journe guy. I'm a Rolex guy. We're suited and booted. Let's get going. What is going on, investors? Hopefully you guys are doing well out there. We got a big one, and Meta has had big performance over the past year. Shares of Meta are up 95%. Year to date, up 67%. So this one had to absolutely, we're talking like Aaron Judge, Shohei Ohtani, like blasted out of the park type performance just to get the stock to inch higher, let alone continue to move to all-time high, even above all-time highs. So we still got a $1.5 trillion valuation on this one. So it certainly can expand because based on the revenue numbers coming in at $40.6 billion, that was 19% growth year over year, beat expectations by about $280 million. We are seeing shares retreat in the after hours. We'll get to the technicals here in a moment. What I do like about Meta is first of all, they give forward guidance. Not every company does that of the group that we regularly follow. Also, they tend to also give us a really clear expectation of where total expenses are going to come. So I do respect that out of the company. Now, let's get to the fourth quarter guidance. Again, we'll go through the Q3 numbers here in depth, but all important fourth quarter guidance coming up, and they're expecting guidance or revenue to be between 45 and $48 billion. Remember when this company could not get over $30 billion? Now they got a $50 billion problem over at Meta. The expectations for Meta was for 46.24. So again, company expecting 45 to 48. My guess is they'll come probably darn near closer to 49. The high-end estimate over at Wall Street was at 48. And so I fully expect this company, with all the political ads that are playing, obviously we're moving into a fourth quarter holiday shopping season, probably going to be pretty competitive. I think the holiday shopping season, competitive from the standpoint that consumers are still stretched from inflation. So that means consumers are going to be looking for deals, and that means companies, advertisers are going to be trying to advertise those deals and get as many dollars as they possibly can to come in during that fourth quarter. The money is just, it's not like the pandemic where the money was just getting shoveled into the stores and they barely had to do anything. Now you have to actually advertise and fight for that dollar, and that's obviously going to benefit Meta in the fourth quarter. $45 to $48 billion in revenue. Again, Wall Street expecting 46. The high end 48. So all things considered, that is really, really, really good for the company. Now they're expecting their full year 2024 total expenses come in between 96 and $98 billion. Their previous guidance was for 96 to 99. So they knocked down $1 billion on the high end. Now for Reality Labs, they expect the 2024 operating losses to increase meaningfully. I'll show those to you here in a moment, basically due to their ongoing product development. Now, we'll give Meta credit. During their last product announcements, they prototyped some new kind of Ray-Ban, these kind of thicker goggles, not goggles, more thicker glasses. And that is the form factor they've got to go to. And Meta, out of all the companies, believe it or not, even ahead of Apple, at least from what we've seen of the company, they're ahead of Apple in terms of that. So if the form factor of these metaverse, Oculus, virtual reality goggles, I've never been bullish on that. That is a niche product for gamers and for people that want to put those on in their living room. It's not a mass market device. It's not an Apple Watch. It's sure as hell is not an iPhone. But if they can shrink us down to where I'm wearing a pair of glasses here, and as I'm doing this video, I can be fed different types of information. I can get my text messages and those types of things. Maybe be scrolling through the guidance that Microsoft is giving on their conference call, those types of things. Well, that could be a great product. Maybe not mass market like the phone, but maybe like the Apple Watch or maybe like laptop computers. And so Meta putting this investment in could pay off. We'll see what it's costing the company here in a moment. Revenue came in, like we talked about, $40.6 billion last year. You're at $34 billion. What this company's done, along with everybody in technology, has really controlled their cost over the past year. Research and development continuing to tick up from 9.2 up to over $11 billion. But look at your marketing sales went down. Guys, marketing and sales went down. The company grew its revenues by 19%. And this is not a company that's like one of these small companies and they're doing like a couple $100 million. And so they grew at 19%. And it's like, yeah, they had one big customer walk through the door. We're talking about a $40 billion, not a $40 billion a year company or for a lifetime, $40 billion in 3 months. And they grew, that was 16% growth year over year. And look at your marketing sales. It went from 2877 down to 2.822. Folks, they don't need marketing sales over at Meta. This is the reason why they're laying people off and they're firing these people. Not that they're not good people and not that they're not good at their job. They just don't need them. They literally don't need them. And look at your G&A line as well, from 2 billion, shade over 2 billion down to 1.9 billion. So they've shaved some off the marketing, shaved some off G&A. And I think this is what you want them to do. They added expenses to R&D because that's what's going to be the future of the company, because their product, social media, they have such a dominant position there. Yeah, TikTok knocks on the door every once in a while. Snapchat has knocked on the door. But they can't, kick the door down and totally unseat this company. Total cost expenses went from 20.4 up to 23.2. Again, some of that has to do with the cost of revenue as well, which is just going to naturally tick up along with revenues. Your income from operations ballooned from 13.8 all the way up to 17.4. And if they weren't investing in Reality Labs, this company would probably actually see its share price even higher. Net income went from 11.6 all the way up to 15.7 from a balance sheet perspective. It's exactly what you'd expect. Company has $91 billion of current assets with that's $70 billion in cash. That's like a Microsoft-like number. I mean, it's gigantic. Now, they did add to their long-term debt over the past year. You went from 18 up to 28. So I think they just got some favorable turn on some debt and they were like, let's just take it because there's no reason this company needs any of this. Now, from a 3-month perspective, from $20 billion up to $24 billion of operating cash flow. That is absolutely sensational. With cash flow, you pull down a net income number, you add back in non-cash things like depreciation, add back in non-cash things like stock-based compensation, like these employees would be working for free, but that's what the accounting rules allow you to do. $24 billion. So all important from the semiconductor perspective, the data center perspective. Here's your purchases of property, plant, and equipment. It's not Google. It's not Microsoft. We'll do Amazon tomorrow. It's not going to be Amazon-like number, but still a hefty $8.3 billion. And I would say Meta is probably getting a lot of bang for their buck for their spend there. They've got the Llama models that are being used extensively out there in the marketplace. They've rolled out AI to, some features on their social media. They're running AI on the background of ad serving. And certainly if you purchase ads through Meta and their platforms, you're using AI to basically handle some of the workloads there. Last year, they spent about $6.5 billion there. Now, in terms of, what they're doing for you, the shareholder, well, they're continuing to buy back the stock to the tune of $8.8 billion. And they also are paying a dividend there. Props to Google and Meta for starting to pay a dividend. I love these tech companies with this much excess cash flow. Yes, the buybacks are nice, but those checks every quarter certainly can be something that a lot of investors are looking for. And you'll have dividend growth here as well. Whatever the dividend is this year, it's $2 per share. I mean, look, this company can make it go up 100% and it wouldn't even impact their financials at all. But you could meaningfully jump this 20, 30% a year for the next several years. And so you're holding this one for the dividend growth. You're also holding this in the hopes that Reality Labs turns into a big business, because right now it is actually meaningfully impacting the company's financials. On Reality Labs, our revenue went from a dismal 210 million up to 270 million. Again, this is not you and me running this company in the garage. Some of you guys really talk up Reality Labs and it's this, that, and the other. We're talking about Reality Labs in the context of a $1.5 trillion company with a $40 billion quarter advertising business. Okay. So when you make just $270 million on some goggles, it means nothing. It means absolutely nothing. Okay. And why it means absolutely nothing is look how much money you lost from Reality Labs. Last year on an operating basis, you lost $3.7 billion. It makes my stomach actually get a little queasy to talk about that number's actually gotten worse, up to $4.4 billion. Folks, the advertising business printed $21 billion, 50% operating margins, not 5%, not 15%, 50% operating margins. In fact, they actually exceed 50%. It's like 50 some odd percent. Because off of $39 billion in revenue, you have $21 billion of profit. I mean, it's like one of the greatest businesses in the world. And they dust off $4.4 billion on Reality Labs. Now, if it pays off, it pays off. If it doesn't, it doesn't. I guess the ad business is still going to be there. So that is why your income from operations is $17 billion rather than a number north of 20. Who knows where Meta would be if they maybe started a separate subsidiary that was not underneath the parent company to kind of do this type of research with Oculus. But look, who can complain? Shares are basically at an all-time high. So it was going to take a lot in the third quarter report to push this up. The guidance for the fourth quarter was more than reasonable, 45 to 48 billion when the expectations were 46. More or less in line with expectations. The company has done a fantastic job, but to push even higher on this stock, company's got to do something transformative. Could eventually be Reality Labs. I think the outperformance that this stock has had year to date, up 67% over the past year, up 95%, that has to flatten out into 2025 unless Mark's got a little ace up his sleeve or something. Because when you start to compare the valuation at 27 times forward, compared it to other companies, could AI explode revenues over here? Could the Llama models generate more revenue than currently anticipated from an open source model? Could the glasses come sooner than expected and be a hit product? Certainly could. But again, we have to understand this is a $1.5 trillion company with a $40 billion a quarter ad business. Now, you're looking for pullbacks in Meta, anything back into the $500 range you're looking to buy up at these levels. Obviously, if you have Meta, you continue to hold. If you do want to set a stop loss, you like the profits that you have with this company, they do pay a dividend and they're doing a buyback. So I wouldn't have like a quick trigger of a sell signal on these like maybe in the past. You could have a stop loss underneath 562. You get under 562 with Meta, you're probably coming down into the 530s. You break 530s, then everybody that's out of this stock is going to get their opportunity. For Meta to have a push higher, they're going to have to do something spectacular. That is because, to no fault of the company's doing, shares are up almost 100% over the past year. And when a stock like this goes up that much, it has to take a breather. And so that's where Meta is, and we'll certainly monitor it going forward. And you can join us again tomorrow with Apple and Amazon. I think we got Intel tomorrow as well. And join us again for the Fang Stock Recap Show on Friday, where we recap all the major news from all of these companies on a weekly basis. Hopefully you guys enjoyed today's video. Go get some candy and rest up. We got more earnings later this week. Good luck with your investments.